Now, do you think Bitcoin and Ethereum have bottomed? Have they bottomed, do you think? Because they've been hitting levels exactly as Pablo has called them. And what a huge big day today is, because the US jobs report came out and it was shockingly bad, which means it's very bullish for where interest rates and Fed Reserve is headed. Quantitative tightening is about to end and QE is about to start. Some form of QE is about to start. Okay, heading into today, what did I say about Bitcoin? I said it's going to hit the bottom of this channel. We were almost there. Look, I said about this 113.3 area, right, is the support. It doesn't have to get there, but that's where we're headed. And I said that after we bounced here and came down, we got rejected here. So I said, hey, that's where we're headed. We got to 103.8, right? And I'll tell you why we're seeing this V-shaped bounce right now. For Ethereum, exactly accurate as well. What's the level that I said? High 3500s with a chance to wick down into low 3500s. Why did I say that? I said that because we've had this here, that was the old high, and then we've had another move up into the old high. Usually, if it was meant to break through, it would just go and not look back. But when it pulls back like this, that means it's a fake out. It lures all the longs into thinking we've broken through, but then we pull back, right? Then I said, okay, it's going to retest this level then, because you've just lured a lot of longs in and then you flash out the longs by doing this. So the level of support is 3500s, specifically high 3500s, but as we've seen here, right, it'll wick down below, right, to low 3500s. And then trying to close above this 3585, 3590 area. If we can't close above here, then that's problematic, right? Then this 3300 area is in play. But what's also driving the market today is the bad news, or good news, depends on your perspective, of the jobs reports. Look at this. SP 500 down, right? NASDAQ 100 down. Oh, let me just move the screen a little so you guys can see this better. Okay. Here we go. SP 500 down. NASDAQ is composite down. NASDAQ 100 is down, right? Basically, all of this is in reaction to some pretty bad jobs report. This is the jobs report, and this is what I've been saying all along. Blow off top coming. And I do mean exactly what I say. Blow off top. There's two parts to this. First, we have the blow off. Then we have the top. First, we blow off, go up first. Then we top and we crash. I want to tell you guys how exactly this is going to play out. So today, three sets of key numbers came out. This is a mega week, guys. The market was expecting 110K jobs, which is already pretty weak. We were getting like 220K, 180K jobs created per month, right? So 110K, that's already getting to be like close to sub six figures, right? Sub 100K is sub six figures. That's where the Fed should be cutting anyway. We got 73K. So that's like a major miss. And that's even before they revise it down, right? Even before they revise that number down. Because look what happens the last few months. They said, right? They said the job numbers were 144K and 147K for May and June. And they were revised down 133K and 125K. So instead of 147K jobs in June, we only got 14K jobs. Instead of 144K jobs in May, we only got 19K jobs. That's pretty amazingly disappointing and bad. Like, how do you get those numbers off by that much? This is quite incredible. So, okay. Exactly now, people say like, oh, but Pablo, this is a recession. Recessions are bad. Market's going to crash. And you can see the stock market is coming down now because of fear of recession. Why are we still having a blow off top? Before we answer that question, first let's answer the question of which crypto exchange does Pablo He-Man use? Well, Pablo uses exchange that's non-KYC. That means you don't need to show any ID. That means even the exchange can't see who you are. That means the IRS can't see you. The tax office can't see you. FBI, CIA, nobody can see you, right? Win up to $18,000 just by joining and trading. So 20% bonus just by joining. $100 deposit, get $20 deposit. Deposit $1,000, get $200 futures bonus, right? Up to $18,000 just by trading. That's where you can win. Okay, limited time only. This offer finishes on 12th of August. And folks, if you're watching this on YouTube, then the link is in the description below. The link is in the description below. But if you're watching on any other platform, that's okay. Just click on my profile page and then click on the stand link or the link tree, right? That should be the first deal that pops up. Okay, let's get back to the markets, folks. That's the first deal that pops up because remember, it only happens on the Pablo link, only on the Pablo He-Man link. So here we go. This is the probability of a rate cut. Now, just yesterday, the market was pricing in basically two-thirds chance in September they're going to hold rates steady. Just over one-third chance they're going to cut rates. And today, that flipped, became two-thirds chance they're going to cut rates next month, and one-third chance they're going to hold rates. And then I said, but then that's wait for the manufacturing PMI numbers to come out. Manufacturing Purchasing Managers Index. Manufacturing PMI came out, and I said if we get a double whammy, if we get a miss on both of these numbers, which we just did, then basically we're looking at 100%, 99% chance we're going to cut in September. So that probability has now shot up to 81% chance now that we're going to cut in September. But I think that's moving towards 99% chance. And in fact, I think we're going to get a number of Federal Reserve. We might even get an emergency rate cut. Emergency rate cut is when they don't wait for September, and sometime in August they're just going to cut. September 17. That's 7 weeks from now. I believe they probably won't even wait till then. This is December. We have three more rate meetings until the end of the year, September, October, December. If they wait till September to only then cut 25 points, then I believe the job numbers for the next 3 months, for August, September, and October, it's going to look terrible. It's going to confirm US is in recession already. In fact, keep this in mind, folks. The 74K number we just got today, which says July added 74K jobs, right? You might think, oh, that's not terrible. It's bad, but it's not terrible. It's slowing down. Remember, that's before they revise it down. If they revise it down by another like 140K jobs, then we could easily say in the month of July, US probably lost like 30, 40K jobs, right? Because they almost always revise it down. And people ask me in my Discord, oh, Pablo, why do you say these numbers are fake? How is it possible that you could call that they're fake even before it happens? Well, the reason why I call it fake before it happens is because if it's a truly random number, then it just floats up and down. Sometimes they revise it up, sometimes they revise it down, but they always revise it down. They always, almost like 9 out of 10 times, 8 out of 9 times, they revise it down. You calling that an accident? Look at how many times over the last 2.5 years, right, during Biden's time and now during Trump's time, they give you a strong number, jobs number, Wall Street goes up, right? But next month, they quietly revise that number down. And the market doesn't care. The market just looks at the new number for next month, and it's again a strong number, which they again adjust down, right, the next month. But Wall Street's not watching that. Wall Street's watching the new number. So look at this. Now, I've just shown you my Discord the probability of rate cuts. And even just in the last, even in just like the last hour or so, this number has flipped hugely the other way. So now we have 1.4% chance of rates being on hold by the end of the year. Chance of a one rate cut between now and end of the year, 13%. Chance of 2 rate cuts, right, 42%. Chance of 3 rate cuts, 43.5%. So in other words, the way to rate this table is to say, well then, there's a 85% chance we're getting at least 2, if not 3 rate cuts. If you add these two up, that's 85% chance. And if you add these 3 up, so that's 98.6% chance we're getting at least 1 rate cut. But that's not good enough, folks. If that's going to happen, then if that's going to happen, if we only get 1 rate cut, then I don't think we're going to get a blow off top. In fact, I think US is going to go into recession. We're just going to go down. The way recession blow off top would happen is if we got minimum 2, should be at least 3 rate cuts, and they should come quick and early. The Federal Reserve should come out. I think they should come out and start saying in interviews, well, by the time, like I'm making this video, this is Friday 11 a.m. US time, right? By the time, by sometime this weekend, maybe by Sunday, maybe by late this afternoon on Friday, maybe by Monday when the Fed presidents come in and they get out of their shell-shocked situation, realize how much they screwed up, because they just refused to cut rates 2 days ago. And they said the economic situation is solid. You could not have gotten that more wrong. So what they're going to do is they're going to come out in a number of interviews, because there are 15 Fed presidents who are actually voting and another like 7 or 8 who don't vote this year. They're all going to come out, they're going to parade them in front of the TV screens, and they're all going to say, oh, this is a trend. It's 3 months of bad job numbers, May, June, and July now, right? So I believe we have the mandate to cut, You get so many presidents saying they're going to cut and become dovish, which means easing interest rates, then basically the market is going to pricing 100% chance of a cut in September. And some of them will even be talking about an emergency rate cut. Because if you wait another 7 weeks, the US economy could be in recession right now as we speak, right now. Because when you're saying for an economy that's this big with 340 million citizens in the United States, and with something like 180, 200 million workers, an economy that big, if you told me that you just grew the economy by 14,000 jobs, right, for the last 2 months in a row, then just by accounting error, just by statistical error, I could have easily said last 2 months, you probably had negative numbers. You probably had negative growth. That's easily within the realm of probability, easily within the realm of possibility with statistics. So with US could easily be in recession as we speak, the Federal Reserve should be coming out right now to do emergency rate cuts. Now, for people who have been watching me, for people who have been in my Discord, for people who have been watching me, I called this by saying we're now in the perfect storm. The perfect storm. What did I mean by that? I meant everything was perfect for a blow off, up, then top, then crash. I'll explain my logic once again. This is a perfect storm because Federal Reserve has held rates up for the last 3 years at 4.5%. If the Fed cut twice, 25 basis each from 5% to 3 times from 5.25% to now 4.5%. But the problem is this: now the Fed doesn't want to cut rates. If you believe conspiracy theories, it's because they don't like Trump. Trump is Republican, and the Fed is more in the camp of Democrats. If you don't believe in conspiracy theories, the reason is because the Fed is saying, well, Trump's got these tariffs coming, and we don't know how much tariffs he's going to charge on China, on Europe, on Japan, on Canada. So therefore, we don't know how much prices will go up, and we don't know how much impact that'll have on consumer prices. I mean, any logical person would tell you that will impact on consumer prices and push prices up. So therefore, inflation's coming. We just don't know how much it is. We understand the economy is weakening, but we don't want to be cutting into a situation where inflation's going bad. So because of Trump's art of the deal, he keeps on doing this art of the deal. So therefore, the Fed has a perfect excuse not to cut. Fed has the perfect excuse not to cut interest rates, and therefore, U.S. economy continues to weaken, right? And that is going to push us into a recession. But why do I call it a blow off top? I call it a blow off top because right now the market is going down some, expecting a recession. The market is going to throw a tantrum to force the Federal Reserve to cut rates, where else the U.S. 2-year Treasury yields, the stock market is just going to tank right in front of you to give you the strongest signal possible. The Fed has to come in to rescue the market, and the Fed will react by cutting emergency rate cut or a 50 points cut in December. It could be something like this. If it does happen, then you heard it here first from Pablo. 25 points emergency rate cut before we get to September. 25 points. Say mid-August, late August, something like this. Then in September, we could get emergency, if the numbers still look bad, because then we could get a 50 points rate cut, right? So you got 25, and then you got 50. So you have 75 points of rate cut in the next 7 weeks between now and September 17th. And that's when the market tops. In my opinion, when the Fed starts cutting, right, market will say, wow, liquidity is coming. The Fed will also end QT. I think in the next 7 weeks, the Fed will announce they're going to end quantitative tightening, right? No QT anymore, which is pretty good, because then alts can really shoot up, and we don't have QE yet. I don't think we're going to get to QE yet until interest rates get to zero. But ending QT is a major step in helping altcoins push up, right? So no more tightening. When that happens, basically, you cut 25 points in emergency cut. That's what I think will happen in the next few weeks. Fed announces end of QT, right? Markets shoot up, thinking easy conditions are coming. And by September 17th, Fed is going to panic and cut 50 points. Could be 25, but they could cut 50 points. If they cut 50 points, that's topping signal. That's topping signal for me, because what usually that means is the Fed is in a panic. The Fed is saying we can't control the situation anymore. That's kind of like if you're driving, and you slam the brakes. When you slam the brakes and your kids and your family hit their head on the dashboard, they realize something is wrong. Then they realize something's wrong. That's usually what happens when the Fed accelerates. So let's have a look at where Bitcoin and Ethereum is. So here, as I said, Ethereum has come back and hit the level that I want. As I said, it basically really needs to close above this level, 35.85, and hopefully we close around 36.80 or above to make this a bottoming tail and then keep going up. Now, for Bitcoin, if it closes below, then I believe the test for 3,300 could be on. Then I would open up that probability. Now for for basically Bitcoin, I still think their support level is here, 113.2K. We could wick below and go to like as low as 111K, but eventually we should close inside this channel. Close inside the channel. This may be the bottoming candle. I can't be sure, but I think we're close. Essentially, and then breakout. This is a classic bull flagpole, bull flag, break up, right? A little bit more of a dip, or maybe we've already bottomed. So we're kind of close to a bottom. And the one thing to watch is basically, oh wow, look at this. It's down 5% now. Can we see that, folks? So basically the US 2-year yields is down 5%. I mean, that's US 2-year bonds. That's not something, that's not a shit coin. It's US 2-year bonds. Just went down 25 basis points. 25 basis points is, well, more than 25 basis points is one full rate cut. And also the key to watch is SP 500. If the SP 500 right now is going down because of recession fears, they really, really, really need the Federal Reserve to come out and rescue them right now. Oh, gap down. SP 500 gap down, right? It could do this, something like this. Bitcoin and Ethereum can continue going down following it until the Federal Reserve can no longer withstand the pressure and come out and say, God, we need to rescue this market. We need to rescue the US economy. Screw the tariffs. We can't wait for the tariff to tell us if inflation's coming or not. We just need to save the jobs market as it is now. They announced they're going to cut interest rates in the next few days. Maybe an emergency cut. They're going to all go very dovish. Also announced the end of QT. Boom. Right. We have that blow off top. It'll blow off first. We blow. Whoa. Oh, actually, look how accurate this is. Wow. Look at this. We hit exactly this resistance and pull back. I'm gonna show you guys what this resistance is and the big Fibonacci number. So this red line is this. It's basically the rising wedge that has defined this entire move from COVID bottom. Okay, so this was COVID down here, right? This was COVID, March 2020, right? This is the rising channel we're in. And we know this is a valid rising channel because we hit it once, twice, three, almost fourth time, fifth time, boom, hits it and exactly comes out. So now we can be highly confident in this rising channel. So this is, we have, in terms of Fibonacci waves, we have one wave up, second wave down, third wave up, fourth wave down, and fifth wave. Boom, like this, we pull back, Fed comes in, steps in, right? Sometime in August, hopefully next week or two, stops the bleeding, right? And says, yeah, we're gonna step in and rescue the market here. End of QT, maybe even start QE, cut interest rates, emergency rate cut, signal even a 50-point rate cut in September is not off the table. All options are on the table. Cut rates in before the meeting, emergency rate cut, boom, blow off top, right? That's why I got number 5 written here, right? This chart I've been showing in my Discord and in to folks, you know, in my videos you've been watching as well for a long time. 3, 4, 5, boom, hits there. Somewhere high 60s, high 600s, and that's the blow off top. And this would be around September, October, latest November, we top and we go down, right, back into this range, and then eventually breaking this range in 2026. And people realize, oh no, it's a bear market, like 3 to 6 months after Pablo has called it. Same thing would play out in Bitcoin as well, but I've covered that plenty. So we're inside the final stretch now. Blow off top, altcoin season. We're inside the final stretch. Thank you for staying with me, guys. I'll keep you updated. Stay with me. We're in the final stretch now.